We started the year with two great shows, bangers as the kids would say. Nicole Ruth crushed it last week, and the 2025 housing wildcards have been in play over the first month of the year. One of the wildcards many said would not have an impact is being discussed as we speak. Which one? Let's find out. Go back and watch those two shows if you missed them. Really good stuff. And we will put the link in the comment section below to make it easy for you guys to watch them again or for the first time. But the wild card that is already gaining steam is the removal of the CFPB. As a reminder, we talked about the importance of consumer protection. I think we can all agree that it's very important. But we also talked about the redundancy of the role and the costly regulations and slowdowns to the industry. Now, there's already legislation being formed to effectively reduce the CFPB's budget to $0. The legislation hasn't been passed yet, but they're working on it, stating the CFPB is an unelected, unaccountable, bureaucratic agency that has imposed burdensome and harmful regulations on American businesses, banks, and credit unions. It's an unchecked executive arm, and the Federal Reserve should not be transferring funds to it. Enacting this legislation would save American taxpayers billions of dollars, and we call on the Senate to take it up and pass this new legislation. Now, stay tuned on that one. That'll be an interesting development. Rates was obviously another wild card. An interesting development since the first rate cut is this chart that shows the deviation from other rate cutting cycles. You can see the blue line there is the current cycle where 10-year yields have actually risen since the rate cut and previous cycles have fallen. Now the good news is we should see that fall back in line with other cycles as inflation is tamed. The other good news is the spread between the 10-year and the 30-year mortgage rate is improving. Finally, we've been talking about this a lot. You can see we're starting off the year lower than 2023 and 2024. This is great news as well. As the spread's lower, so should rates. We have a lot of great information today, but that one might be my favorite for today. We also have more homes for sale starting off the year, much higher than 2020, 2021, 2022, 2023, and 2024. This will help all the way around, including fewer multiple offer situations and a softening of home prices. Now, here's a random one, but I went looking for it because of all the recent natural disasters. Take a look at the percentage of borrowers in forbearance, a large increase over the past 6 months alone. Now, the good news is forbearance numbers are down overall as the COVID forbearance dissipate, but we still don't know the lasting impacts of these fires, hurricanes, and floods. That will remain to be seen and may actually be our 11th wild card for the year. We'll keep you up to date. Here's some interesting perspective on a stat we've already shared. Existing home sales continue to drop, lowest since 1995. We've all seen that stat by now, but did you know, for perspective, we had over 70 million fewer people in America back then. That's pretty wild, and the other concerning stat that we don't love is just 24% of homes purchased last year were for first-time home buyers. Now, I do think that number will improve as affordability improves. Not to mention the transfer of wealth in this country from the greatest generation to the boomers to now Gen X. And not just income, but assets as well. That will cause an organic turnover of homes. We're just now starting to see that play out, and it will continue to do so for some time. That being said, the reduction of household formations and young people getting married later in life is an interesting development to me. Does this mean more home buying demand as singles buy 2 homes versus married people just buying 1? I don't know, we'll see. This is a very early leading indicator that we won't see unfold for some time.
Apparently Hills has had a few rock stars. Man, that guy can talk fast. Hey, if you want to be a rock star, feel free to subscribe to our channel down below. Back to the show.
Let me pack in some more value real quick before we go. Here's another interesting one that shows the magic mortgage rate. Only 9% of people say they would buy their next home at the current rates, but 47% of people said they would purchase if rates were 5 to 5.5%. Now, wouldn't that be fun? I don't know. Maybe we'll get close this year. We'll see. Last one that you may need to pause to really take in, active housing inventory for sale. January, year over year since 2018. Only 4 states have more. District of Columbia, Texas, Florida, and Colorado. Meanwhile, scroll all the way to the bottom there, and you'll see that the Northeast is still negative in a major way. Also, those numbers can be skewed a bit just because of the sheer small numbers of homes for sale in general versus the larger states. Well, there you go. A ton of value, content, and intel to digest and share with your friends, peers, and colleagues and teammates. Please share on all formats, on all platforms, and forward the email and the show, and we'll see you guys next week.